the universe of buyers in a calamity for those things falls. And in a rising precious metals market, the premiums that are attached to those things fall as well. In a period of want and deprivation, the market for the buyers of those things falls. The premium falls on them. The liquidity on them falls. So if people are understanding that they're buying precious metals, gold or silver, as a preservation of wealth and a currency in the event of a crisis, then they should buy bullion and bullion-type coins. And I go through all of this very carefully in the Dollar Meltdown. And it's fine if they want to be coin collectors and take coins out and look at them and read about them and, study the history and the minting and so on. That's something different. But surviving the kind of economic calamity that the numbers tell us is unfolding right now in our lives, they need to get as many ounces of gold for every dollar or as many ounces of silver for every dollar they spend as possible.
Numismatics for coin collecting, bullion for hyperinflation, in essence.
You bet.
Okay, got it. All right. Now, how about silver? You get into silver as well. You do a great job explaining kind of the history of how this all began back when the Hunt brothers tried to corner the market and actually did, almost. And then you talk about ways to buy silver. Are you more bullish on silver than you are gold?
I'm not very clear on it, but I think I am. I mean, my heart tells me right now that silver is powerfully attractive at these levels. And, a couple of the other things that are going on in the economy, I mean, the Federal Reserve is moving heaven and earth now of course, to solve our monetary problems, but to transfer the problem from one of unemployment to one of rapidly rising prices. And I was just looking at the M2 money supply figures the other day. Well, in the prior year, 2010, M2 grew about 3.5%. In 2011, the last year to end, 2011, M2 grew by closer to 9.5% or 10%. So they're really goosing the money supply. Oddly enough, far be it from me to say it's in time to make the economy look much better and unemployment to be down in time for the election. But it seems to be what they're doing. They're really driving it now. That means the appearance of a recovery, and that means what looks like the beginnings of an industrial recovery, and that means increased industrial demand for silver at the same time that its monetary appeal is becoming very, very clear to people all over the world. So there you have it. If you have some renewed industrial demand for silver with the goosed, cocaine-crazed economy of the Federal Reserve, at the same time the world is starting to remember silver as a monetary commodity, then you have, I think, a powerful case for substantially higher prices.
Yeah, and you make some good core recommendations here in the book as well in that chapter on how to buy. And again, we go back to bullion. Let's move to oil for a minute, energy. As people look to gain exposure to oil in their portfolios, what were some of your ideas in the book?
Well, it's very hard, in my view, to do oil in the same sort of way that you can do gold and silver. It's a little more cumbersome, and so gold and silver have to be, your first avenue of preparation. And then, next, I think oil would certainly be next. It's cumbersome. I think in other eras gone by, that you can participate in the oil move and the world's growing demand for petroleum, and the unwillingness, this is the key issue, the unwillingness of foreign oil producers to continue to sell their appreciating commodity, their appreciating petroleum that is demanded by people in growing amounts all over the world every day, for a depreciating currency, a paper currency that can be printed at the price of paper and ink, are actually just created by somebody hitting a keystroke with a digital bookkeeping entry. So, if you understand that, you understand petroleum prices are going to go up, if nothing more than to reflect the decline of paper currencies around the world and the decline of the dollar reserve standard. OPEC oil is priced in dollars because of our reserve standing around the world. So ideally, you would be able to do what you do with gold and silver and buy a whole bunch of oil and put it in your backyard or your safe or whatever. You just can't do that. It doesn't work that way. So why not energy stocks? Why not oil stocks? Well, my view is that we are increasingly in an age of nationalization of resources. I mean, we saw a flurry of nationalization during the panic of 2008. We saw Hugo Chavez in Venezuela calling Bush, Comrade Bush, for nationalization of the banks and the automobile companies and the insurance companies and so on and so forth. In a crisis, which is what we're talking about, preparing for, in a crisis, oil companies, I mean, this country, look, has nationalized every kind of country, every kind of industry in the past, and people have introduced bills in Congress for years about nationalizing energy companies and oil companies. So while it might seem attractive to invest in oil stocks, energy stocks, I'm not sure that America is a trustworthy and reliable environment to do that. So the best thing I've been able to really recommend is maybe exchange-traded funds that hold oil.
I was really surprised to see your book on page 188. You talk about how the dollar is, of course, the currency of choice for oil, and that, of course, is known as the petrodollar system. And that's something we wrote about in our book. We wrote a whole chapter on the coming breakdown of the petrodollar system and how eventually that would cause, issues, obviously. But you hit it in your book, and I was surprised because many authors just seem to gloss over that, or they just either don't know about it. We wrote several articles on the petrodollar system, and one of our readers pointed it out to me the other day. They said, if you Google petrodollar system, FTM Daily takes up 5 of the top 10 searches. And I went there and sure enough, I said, wow, this topic is not really being discussed that much, but you do tackle it in a few pages. What is your view on how that could impact the dollar?
Well, it's already unfolding in slow motion. The whole world is desperately trying to find alternatives for the dollar reserve standard. I mean, look, they see us printing this stuff willy-nilly. It's not lost on them that the monetary base since 2008 has climbed from $800 billion to what, just off the top of my head, about $2.8 trillion. I mean, they've blown up the monetary base by $2 trillion. None of these things can be done cost-free. I mean, this is essential understanding of economics, is there ain't no such thing as a free lunch. If they're going to boost the monetary base by $2 trillion, you may not see the effects yet, but there will be effects. And the rest of the world sees this. They understand what we're doing. They understand that the Obama administration, just like Republicans have done before, and Republicans and Democrats will do in concert, will kill the dollar to try to create the appearance of a return of prosperity in this country, as odd as that sounds. The dollar reserve standard is breaking down all over the world. Last couple of weeks, China and Japan, and this is going on around the world as well, created a new bilateral agreement that instead of, as they have historically, pricing one another's goods in dollars, meaning that the buyer has to go into the markets to acquire dollars to buy the goods from the other country, they are starting to find ways to do commercial activities in their own currencies. China is developing these agreements with Russia. You've got the Gulf Cooperation Council creating currency alternatives. The whole world is looking for alternatives because these central banks and governments don't mind defrauding their own people with fiat currency, with fiat money, but they don't want to be defrauded by ours. So this is breaking down, and Jim Grant put it pretty well. He said if you had a country that was able to get the rest of the world to go along with owning its currency as its reserve currency. So once, like countries, central banks, even like our own, used to hold gold and issue their own currency against the gold that they have in the central bank or treasury vaults, they began to hold U.S. dollars and issue their currency against their reserve of U.S. dollars. If you can convince the rest of the world to do that, might not be the lucky country that issues that currency, in this case the U.S. dollar, spend a little more freely, maybe embark on a war or two needlessly that it really otherwise couldn't have been afforded, might not be able to be willing to run up debt because, after all, you've created an artificial demand for your currency all over the world. That's all very true. It has been a boost to our standard of living and the prosperity of this country to have the rest of the world bidding for dollars constantly, driven up the market rate as in any other market or auction a number of new buyers would. And so the result of this beginning to unwind, as it is now, is a lower standard of living for the American people around the world looking for other mechanisms other than the dollar in which to price their goods and services. And since I started off quoting Jim Grant, the author of Jim Grant's Interest Rate Observer, let me finish with him by saying Jim Grant says, there is only one answer to the question, if not the dollar, what? If not the dollar, what? There's only one answer to that, and that answer is gold.
That's powerful. That is powerful. And many people don't realize that, the artificial demand that's created for the dollar gives the permission slip to the Federal Reserve to print lots of money. And so, like you're saying, if they lose that permission slip, down goes the standard of living for Americans. You also tackle agricultural commodities in here, and we're running out of time, but we want to try to tackle a little bit of this. Good idea for individuals to be investing in agricultural commodities in 2012?
Well, it's the same thing that we've talked about. It's not something that you can hold on to in your pantry. I mean, I guess you could have some dry food and food storage. By the way, Jerry, I just noticed the other day that chain stores, big ones like Costco, the warehouse store, and Walmart and stuff, are now stocking preparedness foods. Freeze-dried bucket and bulk preparedness storage foods. Something that big is going on in this country, and people are beginning to realize it. And by the time you get places like Costco warehouses and Walmart, stocking their shelves for this thing, it gives you an idea of the kind of demand, of the widespread realization that the message that we've been talking about is beginning to take hold. But yeah, I mean, clearly, if you had your choice between depreciating paper money or fiat paper money and real assets of any kind, tangible assets if they're agricultural ones, tangible assets if they're raw materials, the preference, of course, is always something tangible in the era of a currency crisis. My old friend Jim Rogers says, in the next 10 years, he said, instead of investment bankers in New York driving Maseratis, it's going to be farmers. That's how bad. How bad the agricultural sector is prepared for the future.
That's something. One of your final chapters, you talk about alternative currencies, foreign currencies, and many people would say, well, if the dollar is going down against gold, and doesn't that mean all currencies are going down? But you do nevertheless talk about currencies here, foreign currencies. What are your thoughts on those as we head into the new year?
Well, I'm not friendly to any of them. It becomes rather confusing for the average American to follow this thing because they'll turn on the financial TV or the financial pages on the internet and stuff, and they'll hear the dollar is up, the dollar is down, the dollar is performing well. Look, all of these currencies are losing value. All of the currencies, there is not a redeemable gold-based currency in the world. The last one was, I think, the Swiss franc had a statutory backing of 40% gold. Lebanese pound did at one time. There's nothing like that left. All the currencies of the world are fiat irredeemable currencies. And so they trade up and down. One sinks at one rate and one sinks at another, and they go up and down against one another. And so the talking heads on financial TV say, well, the dollar's way up. It really isn't. It's like saying the Lusitania and the Titanic are both sinking. One's descending at a 14-degree rate and the other's descending at a 17-degree rate. So one is way up. They're not up. People go to work. People get up in the morning when the alarm clock rings, even though it's cold and they'd rather stay in bed. People save for the future. They cash their paychecks. The only reason people save and work is for what those dollars will buy them. Not for their exchange rate against another sinking currency, but what those dollars will buy them. And the real living experience of people today is that they will buy them less and less. Look, the cost of government's gone up. The cost of education's going up. Cost of medicine's going up. Cost of insurance is going up. Now you start looking at the cost of cattle last year, the cost of milk last year, you just begin to look at the staples. The cost of gasoline was up, I think, top of my head, 20 cents a gallon from December 30 to December 30 last year. It was up 63 cents a gallon the year before that. People work for what their dollars will buy them. Their dollars will buy them less and less and less. And so if some talking heads, the dollar's way up, it's a favored currency, it's nonsense. The purchasing power of the currency continues to decline. All currencies.
All right. Well, Charles, you have a brand new book coming out. It's going to be coming out next year. Tell us the title. Tell us what it's about.
Thank you, Jerry. It's very kind of you. In March, we'll release my new book. It's called Red and Blue and Broke All Over. And it's an ambiguous title, Red and Blue and Broke All Over, Restoring America's Free Economy. But it means that the country is insolvent, the country's bankrupt. So that's the red, but it's actually the red party is bankrupt and the blue party is bankrupt as well. And as long as we follow their advice and as long as we stick to their talking points, our financial situation is going to get much, much worse. You would think that people would have noticed over the long sweep of history, or if not over the long sweep of history, just at the difference across national borders. We had a living laboratory in East Germany and West Germany. Look at the difference in prosperity between North Korea and South Korea, that where people are free, they are more prosperous. And that is really the essence of this book, I think, is very timely. If the American people would like to restore America's prosperity, if they'd like their kids to have a better life, if they'd like to see a revival of the American dream that means, a better future, a secure retirement, a better future for your kids, good jobs and opportunities, they need to look at the fundamental issue. The fundamental issue at the heart is the